Hello, once again, it's time for business. Now, the Securities and Exchange Commission, SEC, has issued new operating guidelines and a corporate governance code that will regulate the capital markets and enhance confidence in the sector. The new minimum requirements for market operators are expected to be in full force by the end of next year. There is more in this report. Based on the proposed review, fund management firms are required to have a minimum capital of 2 million cedis by December 2021. Brokerage dealers are also required to have a minimum capital of 1.5 million cedis. A trustee should also have at least 50 million cedis. Primary dealers should also by December 2021 have a minimum capital of 400 million cedis. According to the Securities and Exchange Commission, SEC, exiting market players are expected to meet their new capital requirements by the end of next year, that is December 2021, while new entrants should meet it immediately. In addition to the new licensing guidelines, the Securities and Exchange Commission has also issued other guidelines to steer the operations and activities of market operators. These include conduct of business guidelines, regulatory sandbox licensing guidelines, and corporate governance code for listed companies. The exchange had argued that these are part of a broader measure to bring some sanity into the industry after the recent cleanup that resulted in some firms being liquidated. Well, George Yafi joins me to break this whole down, what exactly it means for the market players. Many thanks, George, for having me. So, I mean, these are huge increments. You can even look at over 1,000, percentage points. What does it mean for capital players?
What it means, Charles, is that for you to play in the capital marketplace, you need to be well capitalized. You have enough capital requirement to be in this business. And Charles, for those who are watching us on the screen, for instance, a brokerage dealer, somebody who does brokerage business, for instance, you are being asked that within 1 year, increase your capital from 100,000 to 1.5 million Ghana cedis.
That's significant.
You're looking at a clearing house also from 100,000 to 50,000 Ghana cedis.
That's 50 million.
50 million, sorry.
Yeah.
Thank you so much. A fund manager is doing from 100,000 to 2 million Ghana cedis. All these things are supposed to be done within a year. A clear issuing house from 100,000 Ghana cedis to 1 million Ghana cedis. And that's saying that by December 2021, you should have this as the minimum capital required for you to be in business. The Securities and Exchange Commission has argued that they believe that for a while now, the increment has not been done. Therefore, this huge requirement really is needed. Saying that with all the problems that happen in the industry and all those things, you have this capital, you're well capitalized, you can absorb the shocks, people when they call upon their investments and all those things can meet it. But this is a minimum capital requirement. So the Securities and Exchange Commission is basically saying that they want players or companies to operate in this space that are well capitalized, you are well resourced financially to be in this space. Within 1 year, you should have met this requirement. For investors, it means that if you have a very strong market, the ability to fail is very minimal if you have a strong regulator in this space. And therefore, they believe that with this capital requirement, together with other market conduct rules, we'll have a very strong capital market to protect you and I. So if you place your funds with Company A as a fund management firm, you are sure that your funds are safe. Tomorrow they will not be going down for government to come in.
But others are also making the argument about the timing. We're having this new regulation at the time when we've seen some of these, fund management firms go down. The licenses have been withdrawn for specific reasons. What do you make about the timing in these instances?
I mean, for every player in this industry, they knew this was coming. It was about when will it come? So for some players, if you go through their books right now, they have already made the capital requirement. So it was coming. It was coming that looking at what has happened the previous years with respect to some companies struggling to meet liquidity requirements and all those things, it was just a matter of time. And for all those who have done their necessary extrapolations and necessary engagement, they knew that it would have happened this year before running to next year.
I think we have on our screens the second batch of the...
So again, you want to look at somewhere like maybe a registrar that you're looking at somewhere around 100,000 Ghana cedis to 1 million. You're also looking at a trustee 500,000 Ghana cedis to 50 million Ghana cedis. Somebody who is into underwriting of initial public offering and all the rest, you're looking at from 100,000 Ghana cedis to 2.5 million Ghana cedis.
Was there a consensus reached, you think?
We knew about some engagement, Charles, and whether the players agree to this finally, I cannot say this right now, but I knew that the regulator was indeed engaging all the players with respect to why they had to review their capital and for such a steep jump in the capital requirement. And by December 2021, you should have met this requirement. Some would say that, look at, there's coronavirus, everybody's struggling to raise capital, to go back to your shareholders, to go back to fresh investors that you want to raise X amount of money. You could see some measures in this industry because some might not be able to meet all the capital requirements. That might be good as well, to have more players coming together to put their funds together. So I'm also saying that, Charles, maybe looking at our market, we need a higher capital requirement than what you're seeing right now.
A higher requirement.
Yes, you're right on that.
Anyway,
so depending on who you engage, some will say that it is quite a huge increase. Some also saying that, well, we need more and very strong players to play in this industry.
Are we going to be seeing a review of the dateline anytime soon?
I doubt, because I know a lot has gone into this and engaging the players. But again, in just like what they were saying in parliamentary business, the majority might have their way, and the minority will have just their say. So the regulator may have its way in terms of the fact that this is what we believe we have to do. So they might take inputs, all right. But at the end of the day, just like what happened in the banking industry, the Bank of Ghana had their way in terms of how banks should be capitalized. And Charles, don't forget that this is a minimum capital required. If you want to play in this space as a fund manager, this is the minimum capital that you need to have. Minimum means that you can have more than that.
We can imagine the mergers and acquisitions that could be coming.
It is something that you should be looking forward to within the next 1 year.
Great. George, we're so grateful for that analysis.
Thank you so much for your time.
He's helped us break down the entire regulation from SEC regarding the minimum capital requirement. Huge differences, you ask me, as you could see, as you did see on your screens there. That's how we end this edition of Business.